Hi, welcome to the Market View for Tuesday, the 5th of August 2014. And starting off with the 30-minute chart, we can see that we had 5 signals yesterday morning. As the market traded sideways, of course, these were not filled within the 3-bar rule that we actually use. And it's a shame, really, that the 5th signal wasn't filled as this went on to move higher. Let's just have a look and see what was to be had in this move. It's not as much as it looks. It's 27 pips. So the market moving back to the upside there on Monday afternoon, around about, say, 27 pips. Since then, the market's traded sideways on the overnight. We are starting to see a bit more activity early on this morning. The market trying to move higher there. In the daily chart, you can see that prices are now finding support around the 168.50 level. So this is an interesting level because this brings us back around to this sort of level over here. You can see where the market broke out from here and then moved to the upside. Now we've got all of these down days that we've spoken about, and these will be really useful in measuring the momentum to the upside should the market turn around and start to move higher. And the way to do this is to use the fib retracement tool. And if we look at all of these lower highs to the left, we can use these to measure the momentum back. If we went to the top high using the Fibonacci, which is the conventional rules from the high to the low, this would put in the 62 and 76% there. Well, that's neither use nor ornament because the market isn't going to move up to those levels in one go unless something major happens, and that's also going to be unlikely as well. So what I do is to use the fib retracement tool by just going back to recent highs where I believe the market hasn't or is likely to trade to. I could start off on this bar by just clicking twice, and I can see the market's trading at the 76% retracement there now, so I know that there's resistance at this level. If the market trades above this 76% that I've just drawn in, then I can draw in these here, and let me just move that out. So now I can see a more realistic area of resistance as opposed to going from the high to the low. And it's amazing how well this really works. I call it, I've named it the rolling fib, because I'm just rolling back to each consecutive high and drawing in, and this allows me then to see where there's likely to be some sort of resistance, which you can see there, the 168.9 area, and we've got the 168.50 here as well. So I know that in between these areas I could use these as potential profit targets or at points to actually move the stop to break even and then see if the market breaks through, if it's got the momentum to the move to the upside. And of course, if I get a sell signal at this area in the 30-minute chart, could also use that as a potential sell as well. It would actually give it a bit more sort of confirmation that there is some weakness around. In the 60-minute chart yesterday, we did have a signal. I just thought about this. We had the trade there for the 60-minute, managing a 20 pip scalp there before the end of the trading session, or just after the close there, the market hitting this. I was actually at the desk at the time when this concluded. Yesterday we had the sell there, and then the market trading up to the scalp area there. In the news, let's have a look, see what we've got. Halifax PMI is, HPI, House Price Index, is out at 8 a.m, which seems slightly odd, normally 7 o'clock. Obviously delaying that by an hour. Services PMI out for the UK at 9:30. Non-manufacturing then for the US at 3 p.m. Nothing at 1:30 p.m. today. In the Dow, the market finding support, moving back to the upside. No buying pressure that I thought we would get, which is interesting. So we had the 1 day of selling, no more selling, market free to reverse and move back to the upside there. So what I'm going to do is just to remove the 76% there, and this 62, and also this one as well. So the market got the support there, and again what I will do in this one is just come back to this high, down to this low, and draw in where I can see a potential problem for this market. If it's going to resume to the downside, it could rally up to this point and then move back towards the downside there as well. So again, keep this in mind as well. So make a note of those figures just in case you happen to be long and the market stops at the 76% retracement there. In the implied volatility, this moving slightly lower for yesterday, down to 12.31. We're looking for 16% for a doubling of the implied volatility, as the low is 7.9. So 16% would give us the pint glass full of froth. And if you don't know what that means, then have a look at the video on implied volatility. Historic volatility at 9, and as you can see in the chart there, the implied dropping back towards the downside there. Okay, that's it for today. Looks like the markets are starting to pick up just a little bit, and that helps enormously. This is exactly what we want. We want to see not too much volatility, actually. You can have too much volatility and no volatility. We just want that happy medium of nice, steady moves. They're the best ones. You get better fills, and they're a lot easier to make decisions as the market unfolds as well. Right, that's it from me. All things being equal, see you in tomorrow's Market View. Have a great day. As ever, thank you for your support. It's very much appreciated. And as ever, thanks for watching.